Bitcoin has been moving higher, and there are three explanations being thrown around: ETF inflows, pro-crypto policy changes, and the Treasury stepping into the bond market with buybacks. But when you actually look at the sequence of events, the story gets a lot more interesting. Let's start with Bitcoin ETFs. By August 7th, the Bitcoin ETFs had recorded 5 consecutive trading days of inflows. Another wave happened on Monday, August 17th through 18th. And normally, you would think billions of dollars flowing into Bitcoin through ETFs would immediately push the price higher. But that's not what we saw. Bitcoin stayed relatively flat. The inflows were coming in, but there was enough selling pressure on the other side to absorb that demand. Then there's Washington. We've been hearing about the Clarity Act and a more favorable regulatory environment for crypto for quite some time. President Trump has been pushing Congress toward crypto legislation, and the market has had plenty of time to anticipate a more favorable policy environment. Again, though, Bitcoin largely stayed in its range. So neither of those things, by themselves, explains why Bitcoin suddenly broke higher when it did. And that brings us to the Treasury bond buybacks that were announced on Wednesday, August 19th. Treasury Secretary Scott Bessent comes from the global macro and hedge fund world. He understands markets, liquidity and, importantly, how expectations can move markets. When Treasury buys back outstanding government bonds, it is not QE. The Federal Reserve isn't creating new money and expanding its balance sheet. But Treasury buybacks can improve liquidity in the Treasury market, reduce stress in certain securities and potentially ease financial conditions at the margin. And that's where this gets interesting for Bitcoin. Bitcoin is extremely sensitive to liquidity and financial conditions. So imagine the setup. ETF demand was already there. The possibility of favorable crypto regulation was already there. But price wasn't moving. Then Treasury intervenes in the bond market. Yields initially respond, financial conditions loosen somewhat, and suddenly Bitcoin breaks out. That doesn't prove that the Treasury buyback caused the Bitcoin rally. But it gives us a hypothesis worth testing. Maybe ETF inflows were the fuel, but the Treasury intervention was one of the sparks. And now we can actually follow the data. Watch Bitcoin ETF inflows. Watch the 10-year and 30-year Treasury yields. Watch the size and frequency of Treasury buybacks. And most importantly, watch how Bitcoin reacts when those variables diverge. If ETF inflows remain strong but Treasury liquidity support disappears and Bitcoin stalls, that tells us something. If ETF inflows weaken, but Treasury expands its intervention and Bitcoin continues climbing, that tells us something very different. Because instead of deciding on a narrative first and then looking for evidence to support it, we're going to do the opposite. Let the data tell us what's actually driving Bitcoin. To find out what the data tells us, click the like and subscribe button so you don't miss what happens next.